Hey traders, welcome back to my channel. Today we are looking at overbought and oversold conditions. So I just did a post on this Saturday, so I figured it'd be good to elaborate on this. This video is going up on Wednesday, I believe, so a little bit late, but still something I wanted to chat about. So a few things, you guys, I just want to tell you right off the bat, like looking for overbought and oversold conditions generally means you're looking for a major reversal, right? Like we're looking when price is overbought to sell. Now, I'm going to be honest with you, I do not trade that way. Like I trade with the trend, okay? So I don't necessarily only teach things related to my style of trading. And the reason being, you guys might learn about, different indicators, different strategies, and that might really work for you because trading is so subjective and you really need to learn about it all and back test, multiple strategies and techniques to find what works for you. So it wouldn't be fair of me to only teach things related to my trading plan. But I did want to tell you that right off the bat. And the other thing to keep in mind is that it is a higher risk form of trading because we're trying to go against a really strong trend with really strong momentum. So it is definitely considered higher risk. But that being said, there's more reward, okay? Because usually you're going to get a nice big reversal and you'll get more pips with a smaller or a bigger risk reward ratio. So just keep those things in mind. I just did want to mention that right off the bat. The other thing is, even if you trade zone to zone and you do trade with the trend, so like right now we're trending up. That's not a very good trend line, but I'm just indicating that we're trending up. Don't come for me in the comments. You still want to know when a major reversal is possible because I'm not going to buy here, right? Like if this is an area I'm looking at as overbought, I'm not going to buy there. So just keep that in mind as well. So we'll get right into it now. I don't want to ramble on too long. I did go ahead and draw in a key level because that's something when you're looking at overbought and oversold conditions, you need to right off the bat have drawn in. So we're on the weekly time frame, which is what I like to look at when looking for key levels. Okay, they're much more accurate on the weekly, monthly time frames. I just prefer weekly. You can do whichever one works best for you. So what I've done is I drew in a resistance because we are looking at an uptrend here. Okay. And I just boxed it in. Now, I have a bunch of videos on how to do this, so I'm going to link my free course below if you want to know how to draw zones accurately and stuff like that. I'm not going to, because this video will just be too long if I get into multiple things. I know I say that every time, but yeah, I'll link that below so you know how to do it. But basically what I did was draw in a key level, okay, a key resistance area. Okay. Now what you want to do when you find a resistance area or you find a key level, you want to go back and make sure price touched it multiple times. Okay. The more times, the better. And also the more recently it touched, the better as well. So this is obviously a nice key zone that we're looking at here. So this is where we're going to look at for potential overbought conditions. Okay. Now the second important thing to note is that you really need to look at price action at the zone. Okay. We need to see multiple rejections. Okay. Which we're seeing here, or at least some rejection. And we need to see a nice confirmation that this actual reversal is happening. So you'd go down to the lower time frames and you'd look for a nice push down. Okay. And again, I have videos on confirmation. If you need the link to those, just let me know. Okay. But that's basically what you're looking for. So just keep in mind that you really need to get comfortable with knowing when rejection is happening. So observing rejection and rejection candlestick patterns, and also when you can take a certain pattern as confirmation for your trade. So those are really important things because the next thing I'm going to show you is useless if you don't know how to monitor this. So that's why I wanted to show you those things first before getting into the indicator. Okay. Now, I am a price action trader, true and true. Okay. I don't love indicators, but indicators will definitely help us to confirm entry points, to confirm momentum that we've already found. And for that reason, I will absolutely use them to confirm what I'm seeing with price action. Okay. So I'm looking up indicator. Let's look up the stochastic RSI because that's what I use when I'm looking at overbought and oversold conditions. Okay. Now you don't need to change this once you plot it. Oh goodness. Why are you not? There we go. You don't need to change this once you there's no settings on it like there are with fibs that you need to change. At least that's not how I use it. Okay. I use it just the way it comes. And in a nutshell, anything below 20, so below the purple bar, is considered oversold. And anything over the 80 mark, so over the 80 line here, is considered overbought. So right now we are in an overbought condition, okay? You cannot base your trades on this alone because you can be in an overbought position, okay, which we technically were right here, all right? So technically here, Stochastic was telling us we were overbought. I mean, it was just a little bit above, but we were overbought. Now, look how many pips, you guys, if you have sold here when we were overbought, you would have lost out on, okay, 920. So you really, because we're on the weekly time frame, remember? So you really have to be careful and still use proper risk management when looking at these things. You can't, unless you have a super wide stop loss, and even then it's just, do yourself a favor and use price action first before using this guy. However, it does give you an area to note. So what it's telling you, and you can go back and back test this, it is very accurate in telling you a general area where price is overbought, okay? So this is giving us a general area where price is overbought. And at that point, what you can do, so when you see price rise above this area, you can start looking at your price action, okay, for confirmation that you are in an overbought or you're in a key zone, you're seeing that rejection and whatever. So that's why I was really careful and I showed you those first two things at the beginning of the video, because you need to know that in order to get into this stuff. So that's it in a nutshell, you guys. I'm not going to go on and on about it because that's really all there is to it. If you want to know more specific details about it, you can always take my course. You can ask me questions in the comments, or you can leave a comment below and I'll follow up with another video, okay? So just let me know, because I need to hear from you guys in order to know what you guys want to see. Hopefully you found this useful and it can help you start looking for those reversal areas, or at least be aware of them so that you're not buying in an area like this, okay? Because it's a little more risky. So that's all I have for you today, and I'll see you guys in Friday's video.